the more you develop as a trader, the more you will want to reduce your risk. That's a very, very good question. Yeah, I'm trying to think of the right way to say this all. Well, basically, all right, so Keith is saying, so you lose the first entry. How far back are you looking in terms of candles before you put in a second entry? So if I'm understanding your question correctly, you're saying like, let's just say probably you're getting into a trade, it's at a resistance, and you lose that, and you kind of want to know like how far back in history does it even make sense to be able to place a trade? Is that correct? Yeah. All right. As far back as you want. I remember when I first learned this concept, I was at the time trading for a prop firm in London, and I was trading the S&P E-mini futures, and my trading coach said, Jason, watch this level here. And it was something like a level that was like 3 years old or something like that. And I was like, I mean, I said yes, okay, but internally I kind of blew him off. I was like, yeah, he's a good trader and everything, but he doesn't know what he's talking about here. And so basically out of quote unquote obedience, when the price moved down to this level from like 3 years ago, something like that, and it was the very bottom of a daily candle from however many years earlier. And I placed I placed a pending order so that when it gets down there, it would trigger the order, get me in as a market order, automatically set my stop, and expecting to make money as the S&P E-mini futures moves upward. And I kid you not, it was to the tick. It came down to the tick and then started an uptrend the whole rest of the day from that spot. So that really did something in me where I was like, all right, I realize here that traders all around the world are looking at very significant, obvious levels. And so I don't have a problem with how far you go back. I would say there is no real level that is eventually disqualified. What I would say to that though is that in binary options, you do have the time factor. And so if you're looking like 4-hour levels and daily levels, even weekly levels, that could be really, really awesome levels. You may not have as many people there who are setting like pending orders, like, stop entry orders or limit orders, like the price gets down and it triggers a limit order and they get in. And so there might be a lot more kind of doing it by hand and then waiting for the price to get down there. And therefore, there's not like this, it gets down to the level and then pops. It could be there on these higher time frame levels. It could be there for a while before the price actually begins to move. And when you're trading binary options, you really have to pay attention to that time factor. And so you want to be getting into levels where there's going to be much more of a quicker move when it turns around. And that's why I'm totally okay with like 1 minute levels, 5 minute levels, 15-minute levels, 30-minute levels, even 1 hour levels, although 1 hour levels are really starting to get on that border there. So, but really kind of like 15-minute levels are beautiful. 5-minute levels are beautiful. And so looking at those, but you can go back as far as you want. You're just going to have the limitation of how much data you're able to see on your screen or how much data you're able to scroll back to. So does that make sense there, Keith? So next one we got, okay, you missed the last group coaching session. Is there a way? Yes, just go into your premium member training portal and you'll see it right there. All right, next week next week is last week of the month. Should we be cautious as consider it as Friday trade day? That's a very, very good question. That's a very good question. There is a there's a phenomenon that happens on the at end of months and even to some degree end of quarters, where you find currency pairs where the price has been moving in one direction. Let's say it's been going in an uptrend, and then the banks need to balance their books. And so they start closing out positions. Not necessarily they want to close them out forever, but they start closing out positions to begin to balance books for the end of the month. It just makes it easier for accounting in certain ways, and they oftentimes get right back in it and blah 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 blah. And there are two things that happen in that. First, you can see on the daily time frames about a week before, any from a couple days to about a week before the end of the month, you get these really nice reversals. So if you're a Forex trader and you see prices that have moved a long ways, and then you get, and then it's coming to the end of the month, there might be a pretty good Forex kind of trend fade type trade there. And it's a really, really great strategy. But another thing is to remember, especially for people like us who are support and resistance traders and who have become very, very convinced of the power of trading support and resistance in a quality way, you have to remember banks are not looking at support and resistance. When you think about them closing their trades, think about what their motive is. Their motive is not to make money. Their motive is to balance their books. And so if their motive is not necessarily to make money in that and getting out of it, that means they're not going to be looking for support and resistance. They're just closing their trades because that's just what they have to do from the nature of their business. So they now they might have been the reason for entering into that instrument might have been for the purpose of making some money or for hedging against other things or whatever. But the purpose for exiting it is not necessarily to look for the best place to exit and get out of it from a profit standpoint. It is because they need to balance books. And if they're not looking from a profit perspective, they're looking for, hey, my boss told me it is now time to close these positions. Then all they're doing is closing positions, not looking for support and resistance. And because there are just all of these positions being closed, the price is moving regardless what support and resistance is. So for people like us as support and resistance traders, we have to know a lot of the movements will more than likely be a result of banks moving money around, not traders speculating in the markets. And so it could be very possible that next week support and resistance is not going to be respected very well. And that's really important to remember for trade size is what was mentioned here. So maybe reducing your trade size, being very, very, very picky about trades, not getting into stuff like what my last trade was, that it's like, it became a really nice winner, but I wouldn't be doing that type of stuff next week because the market's going to be a little bit different. So, so those are some of the things to really begin to be aware of. And if you get into a little bit of drawdown, don't be pushing it. Don't be pushing it, trying to get that money back. You have to really cause yourself to be vigilant. I love that word that was used. Vigilant to watching if the market is playing your game. And if the market isn't playing your game, just don't trade. Be willing to not trade. So that is a very, very good question there. Let's see. Next question. Will pocket option ever limit someone's balance or max trade amount based on established success? I have never seen them do that. Will they? I don't know. I can't speak on the part of pocket option. Will they ever do that? Could they ever do it? I don't know. I don't know. I mean, I could see. I could see the possibility of that, but I think that I think what's really more important than that, and I don't know what your account size is, but there's something that needs to happen before that question. The question is basically what you're asking here is, do I have to worry about when my account gets so big that they're going to do something shady? I don't know, but let's deal with your account getting that big first. Like let's get your account to that size, and then we can start talking about that. It's almost like a putting a cart before the horse type thing. And so it's like, what does it take to get the account big enough to be able to do that? And like there are people who have accounts at Pocket Option of $500,000, $100,000, $100,000, $1 million. Like people have those account sizes. And so and most people though have an account size of 1,000, 2,000, 500, maybe 10,000, and at that level there's nothing to worry about. It's a small fish in a big sea, you know what I mean? So all right, really good question so far. What else do we have? Right into the chat if you've got something, and that way I'm not just awkwardly sitting here. Just say I got a question, or just question, and then I know to wait. And I'll give it just a few moments. Okay, great. We got a question coming in. I'll wait for a moment. What are your thoughts on Forex trading as a beginner? I don't really know fully what's being asked by that. It could go in a few different directions. But here's what I would say. Forex trading as a beginner. I love it. I think it's really, really good. Forex is a wonderful trading instrument because with relatively little money, you can really do something. The problem is not with the trading instrument. The problem is across the board where people risk way, way, way too much money. My Forex trading, my trade size are laughably small. They're absolutely laughably small. You will, if I were to, here's the thing. I don't know if you know much about, I don't know if you know much about Forex trading, but my trade sizes for every $1,000 I have in my account, my trade size is 0.01 of whatever my trading instrument is that I'm trading. And most people, when they have $1,000 in their account, they're trading a mini lot or even more than a mini lot, depending on what kind of leverage they have available in their account. But I'm literally trading one mini lot for every $1,000 I have in my account. And that is laughably small because I don't know anyone else who really does that. But even having done that with my automated trading system, 25, 30, 40% in a year, pretty regularly. And yes, there are Forex trading systems where people claim they're making 75, 50, 75, 150% a month. Awesome. But how long are they there for? They're not, I promise you. And so it's all about that risk management. It's all about getting that risk as small as possible. And if you do that, then you'll be surprised at what that becomes available to you. So really keep that risk small. And here's the important thing to remember. You've got to remember this, everyone. You've got to remember this. Like small risk is not what a beginner should be doing. Hear what I'm saying there. Small risk is not for the beginner. The more you develop as a trader, the more you will want to reduce your risk. There's an evolution that happens in the life of a trader. There's an evolution that happens in the life of an investor. Like when someone starts out, They want to be like trading big because they want to make big money, because they have this idea in their mind that traders and investors make big money, and they do. But what got them there? What got them there? And so you need, like, so that's where traders and investors start out, is risking big, almost like this go big or go home. And I'm of the belief system, if you go big, you will go home. You got that? If you go big, you will go home. So you go small, and then it builds and 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 builds. So and the thing, so I was talking about this evolution of a trader that usually start out big, and then as time goes on, they've been knocked around so much they realize it's just not worth it to put that much risk on anything that I'm doing. It's just not worth it. So it's like, you can get to where you're going faster if you just run all of the stop signs and all of the red traffic lights. You can get there faster, but the question is it worth the risk? And I would imagine every single person in this room would say it's not worth the risk. But if you're 5 years old, that might be the best thing to do. You can't imagine, like, of course, just go faster, faster, faster. I mean, when my kids were even younger, all they cared about was me just going faster. So I'd rev the engine a little bit, make them think that I was going faster, but I wasn't, because it's not worth the risk. And so it's the same thing in trading. You actually develop over time, you realize it's not worth the risk, and you actually become more and more conservative in your risk management. And that actually is what causes you to become much more profitable. So I love Forex for beginners. What I really want to encourage is someone learns how to do it well, and not all of the junk that is shown on the internet. How much time per day do you spend trading? I only trade during the trading room sessions now. And I have my automated trading system that I had programmed. I developed the system, and I had programmed for me, and I just look at it just to make sure that there's nothing breaking in it, if you will, or check to see if I need to help it out a little bit. But I only trade during the trading session. Fridays now, I trade all 3 trading sessions. I used to trade all 3 trading sessions all the time, and that is absolutely terrible. Like, it is so draining on the brain. And not only that, moderating all of them, it's so draining on the brain, you'll wear yourself out. So even if you show up to all 3 trading sessions, don't trade like intensely all 3 trading sessions. It will wear your brain out more so than what you realize. And once you learn how to trade, it is time for you to learn how to not trade. And because every time you're trading, you are getting market exposure. And your job as a trader is to reduce market exposure. The best traders get the most amount of return with the least amount of market exposure. So you want to be reducing that market exposure. And remember, the more that you trade, the more that your brain gets tired. And the more your brain gets tired, the easier it is to make a mistake. What I did earlier, I didn't check to make sure I was on the right currency pair. I placed the wrong trade. Why? My brain was tired. I wasn't following my normal path. And those mistakes can happen anyway, but as a result also of being tired. You know, you've been driving along and you're tired, you make a mistake you wouldn't have otherwise made, and it didn't cost you or anyone else injury, but nonetheless, like, oh, I got to be aware. I got to be careful. And you know, if you drive for a long time, many hours over several days, it's gonna have an impact on you. And that's why I have the highest respect for truck drivers, for example, because they are doing that, and it just has an impact. The same thing with trading. And so you need to really learn how to back off. Because of course, trading is exciting. It gets the adrenaline rush going. Obviously, even if it's boring, there is still an adrenaline rush that happens, and you'll find you almost never actually make and make significantly more money to justify the significantly more hours. It almost never happens. You eventually reach this level of the point of diminishing returns, where the more effort you put in, the less effective you are. And so that's really, really important to remember there. Is trading pocket option one of your main income sources? Is it realistic to earn your bread with it? I have several different ways that I earn money, including being a tour guide here in the city that I live in Germany. So I have lots of different ways. I'm even employed at a web development company, and I also do web development as a freelancer, and not just any kind of web development. It's like seriously top level stuff, if I can say that without sounding arrogant. And there's also the income that comes in from membership here at Binary Masterclass, and then there's also the trading, and then other little bits and bobs that I do. So and there's also another marketing company that I'm a part of. So there's little bits that I'm doing all the time, and every once in a while I sell my kid too, and so that's another way of making money. No, that would check that off, but so it is not my main source of income. No. Is it realistic? I think it is realistic to be able to earn some money from it. I absolutely know that that is the case. Is it realistic to say I want that to be my bread winning income? I would say, let me ask you this. You might be a really good blackjack player, and would you say that you're going to win and earn your bread from blackjack or poker? There are people who do, but they are the exception and not the rule. So binary options is really kind of the wild, wild west of trading. It is the riskiest form of trading. There is no other tradable instrument out there that is more risky than binary options. And then you add on to that someone who is not yet developed as a trader, you cannot get a more risky way of doing things. It is risk to the core. So do you want to risk your livelihood on the highest level of risk and potentially not yet be trained well enough to be able to handle all of that? So make some extra money, and then if you want to make your money through trading, put your profits into a Forex account and grow that a little bit, and then take those profits, put it into a stock account, make a bit of money, or a futures account. Probably would go futures first, and then start kind of like spreading that way. Consider the idea of managing other people's money and getting 20% of the profits and possibly 2% annual of the account. So it's what's called a 22 setup. Consider some of those ways if you want trading to be your primary source of income, and not binary options trading as the primary source of income. All right. Well, there you have it. That's a good that was really, really good ask me anything session. And yeah, we'll leave it at that, and you guys have a really great weekend. Okay, bye everyone.